Don't expect a flood of foreclosures. On a daily basis, we actually speak with buyers who are convinced that we are heading towards a foreclosure crisis, and they're waiting for the home prices to drop. And if you've been following the market, you're going to see that they've been going up steadily over the last several months. Based on the most recent data, however, there will not be a foreclosure crisis this time around. The rising costs of just about anything from groceries to gas right now is leading to the speculation that more people will not be able to afford their monthly mortgage payments. And that's creating that concern that a lot of foreclosures are on the horizon. While it is true that foreclosure filings have gone up a bit compared to that of last year, experts say a flood of foreclosures is not coming. That is in part halt of foreclosures during the pandemic. The homes that were heading foreclosures before the pandemic are now coming into play as the various moratoriums that were in place have now been lifted. We also take note when Bill McBride of Calculated Risk shares his thoughts, as he truly has his finger on the real estate pulse. McBride, he is an expert on the housing market, and after closely following the data and of course the market environment leading up to the crash, he was able to see the foreclosures coming in 2008. With the same careful eye and analysis, he has a different take on what's ahead in the current market. There will not be a foreclosure crisis this time. And those are his words. Let's look at why another flood is so unlikely. There aren't many homeowners who are seriously behind on their mortgage payments at this time. One of the main reasons that there are so many foreclosures during the last housing crash was because of relaxed lending standards, which made it easy for people to take out mortgages even if they couldn't show that they were able to pay them back. At this time, lenders weren't very strict when assessing applicant credit scores, income levels, employment status, and debt-to-income ratio. However, now lending standards, they have really tightened, leading to more qualified buyers who can actually afford to make their monthly payments. And data from Freddie Mac and Fannie Mae shows that the number of homeowners that are seriously behind on their mortgage payments is declining. And if you want to take a look at what that graph looks like, I have included it for you here in this video. The principal economist Molly Bose over at CoreLogic explained just how few homeowners are struggling to make their mortgage payments, and she said the following: May's overall mortgage delinquency rate matched the all-time low, and serious delinquencies, well, they followed suit. Furthermore, the rate of mortgages that were 6 months or more past due, a measure that ballooned in 2021, has receded to a level last observed in March of 2020. Before there can be a significant rise in foreclosures, the number of people who can't make their mortgage payments would need to rise. And since so many buyers are making their payments today due to the lower payments thanks to the low interest rates that we saw over the last year and a half or so, a wave of foreclosures isn't likely. So the bottom line is this: if you are worried about a potential flood of foreclosures, well, know that there's nothing in the data that even suggests that that will happen. In fact, qualified buyers are making their mortgage payments at a much higher rate. And remember that about 80% of homeowners with a mortgage has an interest rate that is actually lower than 5%, which helps the foreclosure rate to be lower as well, as monthly mortgage costs are lower than what they were experiencing in today's high interest rate market. If you're thinking about buying or selling a home, please reach out to us. We would love to share with you what's happening in the current market and why it could be beneficial for you to either buy or sell, or both, now versus next year.